The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks Investment Research. And I've got two more names for your aggressive growth stock radar. And let's just jump right into it. The first one that I've selected here is the Goose, Canada Goose. It's GOOS, and that's the ticker. It is the Zacks rank number one, and it has that wonderful divergence that I love to see, an A for growth and an F for value. That tells me right away I'm on the right path here as a growth investor, because growth investors and value investors are inherently looking for different things. So let's jump right into why this stock is a Zacks rank number one. We can see that earnings estimates have been moving higher, and focus really here on the full year, the current year. We've seen the move from 87 to $1.101, and next year $1.08 to $1.31. That's a move in the right direction here. We've got a lot of positive estimate revisions. 5 this year, 4 next year. A couple shuffling of the pennies here. So 2 down for this quarter and 2 up for next quarter. And you can see that right here in these numbers, moving a couple pennies here, not really moving this number in the consensus just quite yet. So there's a little up and down on that. That got a little bit busy there. But let's take a look here at the most recent thing here that I want to stress to this name as well. Big time positive earnings surprise average over the last 4 quarters. Obviously, there is this monster beat here where the estimate was looking for a loss, and we've got a big gain. But even the most recent quarter, which was not too long ago, we see a gigantic beat. And there's just been a lot of positive things going on here. This is a recent IPO. As we look at the chart, by recent, I mean it's almost 2 years. So we can see it's been, just a straight move up here, except for this move here from 65 back down to about 47. That was a difficult move, but the stock has really just recovered here quickly, thanks to an earnings beat again. And the real idea behind this stock is that they sell these jackets and they're very high price, but there is demand for them, and I saw this headline on the Chicago Tribune the other day, so I thought it'd be perfect to just show it here. I screen grabbed it so that we could talk about it. It is this idea of a long line at the Michigan Avenue Canada Goose store, despite controversy and high prices. I think I'm going to underline high prices here 3 times. These jackets are extremely pricey, if you ask me. Of course, I'm a cheap person by nature, but $1,000 to even $2,000 for some of these jackets, just a lot. But it tells you that people they don't care about the prices because there's a long line. They want them. There is a long line. I mean, I think that there's 2 things happening here: long line, high prices. I mean, all of that is good for Canada Goose, and I don't even know what the controversy is. I didn't even read the article. It doesn't really matter. High prices, long lines, that's good things for a stock like this. All right, so let's jump ahead to our next idea here, and that's going to be OnDek Capital, and that's ONDK. OnDek Capital is one of these stocks that is a crowdsource funding sort of idea. It is a Zacks rank number one. It's got a strong buy, and it's got that A for growth. Normally, I like to see a lower value score, but I'll take a B for value right here. And this stock was recently upgraded as well. And I think that happened yesterday, and I think that was UBS, and they moved their target price to $11. So it's $7.80 as I'm doing this video. That's quite a bit of a potential increase there. So if we take a look at the earnings estimates, why this stock is a Zacks rank 1, we can see that numbers have been moving up here from 11 cents to 16 cents for this quarter, which is quite a big leap. For next quarter, up a penny. And that has translated to a large move here in the full year estimate for this year, 41 cents going up to 53. and then next year going from 46 up to 53 as well. So those are good moves. Add into the idea, again, another good solid beater here. They beat the number and they beat it handily. So you have to like that idea. Let's jump to the chart here, and I think we're going to focus in on why I kind of like this idea. This thing started off as this hot name a few years back. Oh, this crowdsourcing, and then it just sank here. All hands were not on deck as the stock went down. We had a series of bad quarters, but now as we see, rates increase, and I think that's kind of the idea here. That is what really has helped the company here, along with some big beats. These are those big beats. So higher rates, big beats, better execution, and the stock is really coming off of a bottom here, just under 4. Now testing 8, and again, that analyst believes $11 is the price target a year out. Even though the Fed has kind of given us a signal that maybe the rates won't continuously move higher in 2019. The rate environment is still such that a crowdsource funder like this name is probably something that is worth a good second look. And that's why I'm putting it on your aggressive growth stock radar. Well, that's it for this week. Be sure to join us next time when we take a look at 2 more aggressive growth stocks for your radar screen.